Good afternoon, everyone, and welcome to Philanthropy Impact's Walk in My Shoes series for professional advisors. This series has been produced to provide concise but informative sessions to help you navigate the philanthropy and impact investment space. And they are part of our mission to increase and improve philanthropy and social investment and to also encourage impact investing, which is the focus for today. We offer a range of educational events and training workshops to increase knowledge and understanding of philanthropy and impact investing. If you'd like to know more about that, then I will share my email in the chat for you. Today is another one of our interview with style sessions, but we do want to encourage audience interaction via the chat function. Please introduce yourselves, give us your thoughts and pose questions to our guests that way. If you'd like to interact, please make sure to add panel and all attendees when you type and be respectful to all throughout. Your chair for today is our board member, James Broderick, who is director at the Impact Investment Institute, and joining Jamie, we welcome Alex Neckles, who is the Regional Director at ImpactAssets. Thank you both for taking the time to be with us today, and I will now hand over to Jamie to make us start. Thank you, Jamie.
Thanks for the intro, Zafia, and Alex, thank you for making the time to join us. I would just add, Zafia, that in addition to being a director at the Impact Investing Institute, I was CEO of UBS Wealth Management at UBS Wealth Management, where I have responsibility for our donor advised funds. So this is an area that I'm really interested in. Alex, I've been looking forward to this conversation, and I think it'll become clear why once we all hear the story of ImpactAssets. But let me just start by saying that there was a lot of fanfare in the philanthropy world about 3 weeks ago. I don't know if you saw this, Alex, when the Nathan Cummings Foundation in New York published a report on its 4-year project to move its endowment, so it's a $450 million endowment, moving the endowment portfolio entirely into sustainability and especially impact investments. The report goes over the thinking, and maybe later I can drop a reference in the chat, but it's best summarized in the very memorable quote from the board chair, Jamie Meyer, who said, "Why would we want to be killing the whales with our investments while trying to save them with our grant making?" And when I read the report, I immediately thought of ImpactAssets because I'd seen you speak about the features of your donor advised fund. It struck me that you don't really have to be a $450 million endowment to move into impact. You can actually do it within a donor advised fund, at least in the US, at least with ImpactAssets. Because in a sense, a DAF account is really a mini endowment. And a lot of that aspiration and ambition of the Nathan Cummings Foundation could just as well apply to a DAF endowment of a more modest size. And that's exactly what I'd like to talk to you about today. So Alex, welcome. Thank you for joining us. And maybe you could start by a little bit of an intro of you and ImpactAssets before we move into the meat of the matter.
Sure, happy to, and thank you so much for having me. So a little bit about me and ImpactAssets. ImpactAssets got started about 10 years ago. And we came out of a group it used to be called Calvert Foundation, now it's called Calvert Impact Capital. But going even further back, the roots of where we got started was by Wayne Silby, one of the founders of Calvert Investments. They had gotten started with the idea of how do we divest our mutual funds from the apartheid regime. And that was originally where this idea got started, was divestment. Then a few years went by and they said, okay, let's start Calvert Foundation. And let's actually, instead of just divesting from bad things, let's see if we can turn investment dollars into investments for good things. As it continues, then some of our clients, the investors into the Calvert Impact Capital note, said, this is fantastic. I love investing my traditional assets into impactful things. But what about my philanthropic assets? And that was the question, because previously, by and large, for much of the philanthropic dollars that exist, the idea tends to be, let's make as much money as we can with the investments, but then we'll just use whatever grant capital we have, the 5%, to grant to the causes that we care about. And ImpactAssets was started with the idea that this pool of money that you've received the tax write-off for, not only should you grant to those causes you care about, but you should invest as much as possible into them as well. In that sense, I had never really heard about impact investing when I got started in what I was doing. I went to Boston College, which is a school up in Boston, Massachusetts, where it is run by the Jesuits. And their motto is men and women for others. And that to me had meant I will go do service trips. I will go work at nonprofits. But it seemed like it was one of those things where you had to decide either you're going to make money or you're going to go and essentially do a life of service. And it was fine. You know, I tried to thread that needle, but it wasn't successful for most of my career. I had done investor relations for US listed Chinese companies, solar companies. I had worked in law in terms of working in multifamily affordable housing, but it always seemed like on the spectrum of either being for good or for making money, it tilted heavily one way or the other. And when I found out about impact assets, what I loved was that I felt like I could go back to my university and say that there is a third way or a new way, which is that you can not only grant to the causes you could care about, but you can invest in them. And that's how I ended up at Impact Assets. And I've been at Impact Assets for about 10 years now, doing a variety of different roles, but really hooked on the idea of activating more of these dollars so that you can have a positive impact with the investments you're making.
Alex, can we go over the basics? I don't know whether people in the audience all know about what a donor advised fund. Can you give us a two-line definition of a donor advised fund, how it works? And you can describe a US donor advised fund, and I'll let you know if it's very different from the UK version.
Sure. The easiest way of thinking about it is that donor advised funds were created where a sponsoring organization that's a nonprofit could essentially manage a lot of private foundations. So as opposed to one person having to set up the structure of a private foundation themselves, they could open an account and have a donor advised fund where they've made a contribution. They get a contribution receipt for that gift, and then they could continue to have the Jamie Broderick Fund at Impact Assets.
So you're right that when I describe it as a mini endowment, that's pretty much what it is. Okay. All right. So
that's correct. Where, you know, you still have the ability to, it's called donor advised because you still have the ability to decide where you would like to grant and where you would like to invest that money.
And I have to say, I think DAFs are a fantastic concept. It's a great way to for somebody who's got accumulated wealth to organize their thinking before they decide what they want to put the money into, especially if there's a liquidity event like sale of a company or something in the high net worth environment. So I think it's a fantastic thing. But there is criticism of DAFs that they hoard assets and they don't get distributed. So I wanted to ask you, does impact investing actually address that criticism? Because if the assets are sitting there and not being distributed, but they're doing good through the impact investment, is that a partial response to this question about whether DAFs are retaining too much? What do you think about that?
At a personal level, I really appreciate the debate because I do think that it's incumbent on us to figure out as a society, are these dollars that you're getting this taxable benefit from, if they're not having a positive impact, then what's the point? I would believe that we need to activate more of these dollars to have a positive impact as much as possible. I would say that, you know, when it comes to our clients, many of the investments that they're having are having just as much, if not more, of a positive impact than their grants might. I have been blown away by the investments our clients have made into impactful organizations. But that said, you know, I think the debate is crucial. You know, there's a movement in the United States right now called Half My DAF, which is essentially saying, why are we accumulating wealth into these accounts? They have grown, the industry has grown from about 40 billion in 2012 to about $160 billion in both community foundations and donor advised funds just in the US. And the Half My DAF movement is saying, what good does that do to society if most of that money is just being invested in a brokerage account? And the reason why I say I would agree with it is to say you're right. More money should be having a positive impact. And I think it's on us as a society to say, what do we consider a positive impact to be? Is it purely just grants? Is it a socially screened mutual fund? Or does it need to be a more impactful direct investment into a company or a fund? So I would agree that it is an issue, but I would say many of our clients are making spectacularly impactful investments. I'll stop there because you could tell it gets me going.
Well, I'm happy to have you get going because, you said something that's really interesting to me, which is, can you do as much good with your existing investments as you've done with your grant making? And, in the US, basically it comes down to, in the US, you're required, an endowment, not a DAF, but an endowment is required to distribute 5% of its assets. And so the question becomes, can you do more good with the 5% of the assets that you distribute in grant versus the 95% of the assets that are being invested in impactful investments? And I think it's a bit of a toss-up whether an endowment is doing more good with its grant activity or its impact investing activity if it is fully invested. So Alex, the thing that was really interesting to me about impact assets is the extent of the impact offerings. So I have a DAF, I'm used to DAF, there's a little bit of this, there's a little bit of a couple impact options, but you've got an extraordinary selection. I think the number you gave that the last time I heard you speak was 835 investments. And I just wanted to know, how do you manage that? How do you create that kind of optionality, particularly in complicated private market investments, to ensure that your DAF clients really can deploy with impact?
Yeah, it's a lot of work. When we got started doing this, what Jamie is talking about as well is that we not only offer the ability to invest in things like socially screened mutual funds, things of that nature, but direct private debt and equity investments into both for and nonprofits from our clients' accounts. When that got started, it was some of our clients, really friends and family, saying, hey, what do you think about me using my dollars for this? And, in our tax structure, when you look at the IRS, Impact Assets was an organization that our core mission is to accelerate the growth and development of impact investing. And so, this work, it's pretty extensive, and, it took us a long time to figure out the best structure, but every one of these investments, we believe, is in furtherance of our mission. So we're helping to hopefully grow the field of impact investing. And so when we got started, it was 12 manila folders on my desk where we were trying to hold on to all those investment documents and paperwork. But what we've really seen is that there's a real desire for this. And we are now at a point where last year we did over 200 of these investments. This year we're on pace for between 250 and 300. And what we've done is we've developed a team that every day is structuring and working on these investments. And it really comes down to, effort and desire. We are an organization that wants to build out a staff and systems, work with our accounting partners to make sure that we're properly accruing for all of these investments. It is something that many nonprofit organizations like private foundations or other donor advised funds might not have in place, but it's something that hopefully is becoming more common. So, we have a team of 6 people that all they do every day is work for our clients to make sure that they're able to do these investments and get them done in hopefully as little as 2 weeks of a time period. So that's a long way of saying it's a lot of work, but we think that is our mission, and so we make it happen.
Can you do custom investments? So if I bring you an idea of a social enterprise that I've seen that I'm really interested in, can you put that into my DAF?
Yes. So an example, just a real life one. One of our clients is Seth Goldman. He lets us talk about it. He founded Honest Tea, which is all organic tea company in the United States. I'm not sure if it would be considered so in the UK, so I'll leave that to you folks to decide. But in the US, that company was bought by Coca-Cola. And with the liquidity event that he had, he created a donor advised fund. What he believed in was the idea of saying, I want to not only grant healthy food systems, but I want to invest in them as well. And so he took his philanthropic dollars with us and he said, I want to invest into this company called Beyond Meat. He was an early investor before it went public. And he said, I want to take these dollars and I'm recommending an investment into them. Our team looked at Beyond Meat. We looked to make sure that there was impact cooked into the DNA of the organization. And then we made the investment from his donor advised fund account, and he held as a line item Beyond Meat as one of his investments. When Beyond Meat recently went public, he actually had a liquidity event in his donor advised fund account. So that's a more well-known example. But for every one of those investments that our clients have made where they had a liquidity event, we have many investments that are $25,000 direct line of credit investment into an early stage cook stove company in East Africa. The range of what you could do with these custom investments is significant.
That's amazing, Alex. I can see that you guys are working pretty hard but that is amazing to me. I find that really, really appealing. But let me ask you about how you work with financial advisors, because a lot of this is, when you get used to it, it feels quite natural. But for most people, they're going to need the help of a financial advisor. How do you work with financial advisors so that they can work effectively with their clients on their donor advised funds?
Candidly, it's been a mixture over the years. We have worked with financial advisors that are very excited to do this for their clients and help them and support them. We have worked with other financial advisors that have held their nose and been dragged by their clients to do this. Not because they don't believe in impact investing, but I do think there sometimes can be concerns about, I'm not as familiar with this structure and how I can be a value add. There are sometimes concerns about things like compliance or the offerings that their firm has. And so in terms of how we work, I like to develop as deep of a relationship as we can with the firm. In my personal experience, if there's a firm level relationship, that means that you're letting the compliance team be familiar with what it is that you're doing. You're letting the investments team be aware of what your process is. And finally, you're letting the advisors know not only how do I talk about impact investing, but why it's important to let your clients know about impact investing using philanthropic dollars. So a perfect example would be an instance like that, where we have a relationship with the firm and we're able to help them essentially act as an outsourced impact CIO. And so we're happy to do that role. There have been other instances, like I said, where it's more individual. So we work with an advisor on a case-by-case basis. But I personally love it when there's a deeper relationship that we can help that advisor also develop their impact offerings or just communicating the why of impact investing over time.
Yeah, I love the concept, Alex, of the outsourced impact CIO. That's a really interesting concept. And for a lot of people that are just getting their feet wet, just getting familiar with impact investing, that concept of a resource like the one you described, where you can not only get some guidance conceptually, but also then have an inventory of impact options. That sounds really, really interesting. I think there's a big difference between the US DAF environment and the UK DAF environment. So there's about £1.3 billion worth of DAF assets in the UK. There's 100 billion pounds in the US. There's your 160 million or thereabouts, 160 billion. So you've got an economy that's 6 times as big with 60 times as much in the DAF environment. So it just feels like there's tremendous potential for growth in the UK. Very similar financial and philanthropic environments, tremendous opportunity for growth, I think, in the UK. I've got a couple questions that are coming in. So let me throw a couple of these at you. So here's a question. So what are the main issues impact investors are having when using DAFs to invest? Do clients feel it is an easy or a difficult process?
Yeah, I would say, and I hate equivocating so much, but I would say it depends. And one of the things that we found is that there absolutely has been a bell curve of adoption and experience in terms of impact investing. we have some clients that come to us and they are experienced private debt and equity investors. Maybe they were an entrepreneur that built their company doing that type of investing. When they come to us, they understand exactly the type of investing that they'd like to do, and they're happy that there's a taxable structure that allows them to do this using their philanthropic dollars. So they just say, hey, I know exactly what I like to invest in. Off I go. I'm just happy I can do this with my philanthropic dollars. We have other clients that come to us and say, I've been making grants to nonprofits my whole life. I don't even know about this investing. I'm trying to make grants. And so in that sense, I would say one of the challenges is working within both of those across that entire spectrum, and making sure that you're helping both sides of that spectrum and across the spectrum. So making sure that for an experienced investor that we're able to quickly work within their process to structure deals and make sure that they're approved, because they're very fast moving. They know exactly the deals they want to make. They want to enter into a round and get the investment done as soon as possible. On the other side, it's essentially trying to create an on-ramp to impact investing for somebody that doesn't have that experience. So not only explaining the why of doing an impact investment with philanthropic dollars, but how that's done. And so, we have private debt and equity funds that we make available to our clients where we can't recommend them necessarily. We're not saying you should invest in this portfolio, but it's saying, here's a private debt fund that does microfinance. You can invest for as little as $10,000 and know that our team has already reviewed the investment. And so trying to make sure that somebody that has no experience with impact investing can feel like they could join in is something that we're spending a lot of time on as well.
And Alex, what's the split between people who come in on a do-it-yourself basis versus those who come in with a financial advisor?
The financial advisor space has become far more popular, especially for, as we've seen, with everything that's been happening in the U.S., both with the COVID pandemic and the racial justice movements. A lot of advisory firms have said, we need to help our clients because they're asking for support in how they can more actively get involved with having a positive impact with their dollars. And so advisors are saying it's very difficult sometimes to get an advisory firm to quickly pivot and add things to their platform that are available to invest to help COVID response and the racial justice movements. And so we're seeing advisory firms looking to us to help out and, at least to start activating those philanthropic dollars.
Let me ask you another question from the audience. How are you expanding the portfolio of possible investments? So how are you scouting out, African SMEs or smaller NGOs operating more innovative financial models?
One thing that we try and do is this is not connected to our donor advised fund, but one of our founding board members, Ron Cordes, when he first started trying to get involved in impact investing 10 years ago, he went online and he searched for best impact funds. And it was, I believe, a fair term is to say sparse in terms of what he was able to find. And so every year, what we have done is we've put out a list called the ImpactAssets 50. That is not the investment opportunities available to our clients, but it's really a searchable database of 50 private debt and equity impact fund managers, where what we're hoping is that advisors and clients can go and have a place where they could just search and begin their research to find impact offerings. So in that sense, you could search and say, I would like a private debt fund working on sustainable agriculture in Africa. And that would pull together not the actual funds themselves, but the managers that are working in those areas. So it is by no means a one-stop shop for all of your research, but hopefully a starting place where if an advisor says, I've got a client asking for this, they might be able to start their research there. And to the point about expanding, this year what we've done is we've created a subset called the Emerging Fund Managers Group, where for our traditional offerings, they need to have 3 years of track record, a certain amount of dollars under assets under management. For the emerging track, those we remove some of those list those, what those requirements are, so that new fund managers can also get the exposure, so that nobody could have a third fund if they don't have a successful first and second raise. And so what we're trying to do is make people more aware of these emerging managers to invest in them as well.
I've seen the Impact Assets 50, and I can't give the, I would just urge the people in the audience to go to impactassets.org, and you'll find the Impact Assets 50. It's a really interesting view, but it's interesting, Alex, the way you described, you pull away some of the constraints that you normally expect with an institutional investor, 3-year track record, et cetera, and that opens up a little bit of flexibility. But plus, some of the more innovative stuff is going to come from your clients. They've seen something specific. They then propose it to you. You do due diligence, and that's probably, am I right that that's probably the way some of those really innovative things get into the system? Through the clients, yeah.
Yeah, so we have something that is in beta. It's relatively new that we're talking about, which is Impact Ideas. And it's something that we are by no means, fully out to the market with. But what we've seen, especially as the early adopters, they were doing impact investing 10 years ago. But as people have joined and they've said, I have this wealth and I want to get involved, we're trying to support people that don't have the network of impact investments that they know and they'd like to make. And so the idea or the theory with Impact Ideas is making it so that you could let us know what themes or sustainable development goals from the UN are you interested in? And as we have different investments that come across our desk, we could let you know about them. And so, it is very early. And in fact, I might even get in trouble from the team for talking about it. But we really do feel that to grow the field of impact investing, it's important to make it easier for people to get involved that aren't experienced impact investors as well.
So we're going to run out of time here, Alex. I hate this, but let me ask you about impact. How do you measure impact? Impact measurement is a big theme. How do you do that? Or how does that come up? And meanwhile, John Pepin has showed up telling us that we don't have very much more time. So please answer quickly.
Okay. Measuring impact can be extremely difficult as an organization because we've got early stage investments into cookstove companies and a socially screened mutual fund. What we try and do is we aggregate as much data as we can based off the UN Sustainable Development Goals. And then what we're really doing is we're pushing each of our investees to provide us that impact reporting. So every time we make an investment, we have a side letter that asks for reporting on impact. It could be as little as a narrative for their audited financials, that we want to see an impact audited statement as well. So depending on the investment, we ask for different levels of reporting, but it's very important to us as an organization.
That's great, Alex. Thank you. John, over to you.
Hey, thanks. Thank you, Jamie. Thank you, Alex. That was really wonderful. Great discussion. I guess a couple of things. One is on our new website in next month, we will have a list of all the donor advice funds in the UK, all their characteristics, how they handle issues that have been discussed here. But maybe, Jamie, a quick question about the UK. What Alex is talking about, how close are we to that model that he talks about?
John, I think there are elements of it in the UK, but as I said before, it's a much smaller environment, and each of the vendors is much smaller. I mean, basically, Impact Assets is as large as the entire UK DAF industry. So you can sort of see what the resource challenge is. There are individual DAFs that are now making opportunities available, and there are DAFs who will respond to client requests, a little bit like we discussed earlier. I've seen something, I'm really interested in it. Could you do the due diligence on behalf of the DAF and approve my investment in this space? So there are several DAFs that can do that, but it's much more, I think there's a standard menu, and then the more exotic and more specialized stuff has to be brought to the DAF by the client, but it is possible.
Well, that's good. There's 11 DAFs in the UK. We'll have our research on the website about that. Alex, I'll give you the last word. Final words of wisdom, 30 seconds, encouraging the UK market to move in the same direction.
Well, this is my phrase that it's corny, but I believe in it, which is that impact investing is so important that it should not only be the purview of philanthropic dollars or donor advised funds. That said, I am a firm believer that all philanthropic dollars can and should be invested for impact, because the idea is, really, this is a great place to both maybe toe dip into impact investing, get started, use the dollars in a more catalytic way, maybe doing something that, doesn't generally follow your risk and return. But, if you've already received a tax benefit for these dollars, hopefully you're feeling comfortable saying, let's make every one of those dollars have a positive impact. And if we could be of any help in both sharing content or collateral or experience, hopefully we can help out with that.
Well, it's great. A lot of talk about impact investing, but also the purpose of donor advice funds is to actually make donations as well. So the combination of the two is really quite powerful. So thank you very much. It fits, Alex, with a lot of the work that we're doing that Jamie's helped us with around our new training program for wealth advisors and dealing with suitability issues. So thank you both for this. That was really terrific. Over to you, Sophie.
Yeah, thank you both. I'm just here to say what we're doing next week. So this week we have got an hour-long webinar happening where we're looking at the community investment tax relief, which I think will be really interesting for our advisors. And then back next week for Walk in My Shoes, where we are going to be exploring the topic of understanding your values and being the trusted advisor. So hopefully some really good stuff to look forward to. Have a great week, everybody. And thanks again, Alex, for your time. Bye.
Thank you so much.